Happy Monday, my good old friends of YouTube. It's your boy Stas here. Cheers, by the way. I appreciate you all for tuning in as we have 7 companies, 7 stocks to break down, all of which are reporting earnings this week. As I'm sure you guys know at this point, earnings season is in full effect. We had big tech companies report last week, and we have a lot more this week, guys. It's a jam-packed week, so let's break down these 7 companies, what I'm doing, the estimates, the whole 9 yards, the charts. But first, hit the like button, make sure to subscribe, join my email stock newsletter, it's free, and check out my Patreon for my portfolio updates. All the links are right down below, and with that being said, guys, cheers again. Let me clear my throat, and let's dive into the video. So it is about 10 a.m. right now on the East Coast. You're probably watching this at about 1 p.m., something like that, East Coast time. Either way, it's going to be relevant. This video is going to be relevant because, again, we're going to cover these 7 stocks. But right now, as of this video, which it might be different when you're watching it, but as of now, stocks are green big time across the board. The S&P's up over 1.1%. QQQ, guys, are you ready for this? Is up 1.6. The Dow's up 0.9. Same with the Russell. And the VIX is down 12%. We are seeing a beautiful green day to kick off this week. Essentially everything we want to see after last week's, or last Friday's rather, bloodbath. You know what I mean? So we got a big dump off last week, mostly Friday, and this is a great way to start off the week with a nice rebound. We're bouncing off the 180 SMA on the 4-hour chart on SPY, same on QQQ. This is a very good look for stocks this week to kick off the week, heading into another big earnings week. So without further ado, guys, without wasting any time, let's break down these companies, these earnings that I'm watching and that you should be watching as well. So number 1, we have Uber, ticker symbol UBER, and this stock's actually down about $10 from the recent highs. We hit 97 bucks back in early July. Now we're at $87, about a $10 or about an 11% drawdown. Heading into these earnings, which I think are on Wednesday. Wednesday in the morning. So Uber, analysts have them doing EPS of 62 cents versus 47 cents from last year on revenue of $12.47 billion. Excuse me, guys, by the way. I don't know what's going on with my throat. I got to drink some water or something. Versus $10.7 billion from last year, up 16% year over year. So EPS, 62 cents. Is the estimate, and revenue $12.47 billion, which is up 16-17% projected year over year. And again, the chart is looking pretty good. The stock's down $10 per share from the recent highs, not a big deal at all. And we can see the overall uptrend, well, is holding. If I draw the channel tool out, you can see, boom, we hit $98, saw the drawdown to 87. All while maintaining an uptrend. You guys see that right here. So if Uber, if their numbers come in hot, we might see a nice continuation play. I actually really like the setup here heading into earnings, guys. It's a little oversold. We got some weak hands shaken out. We shook them out. I think if they surprise or if earnings are good, we get a nice rebound on Uber. So watch out for Uber. Shopify is another one, SHOP, that I'm watching very closely. It's up around 4.5-5% as I'm making this video. The uptrend's maintaining. We're bouncing off the 180 SMA. We're actually breaking over the 50 as well on the 4-hour chart, heading into these earnings on the 6th. So in the morning on Wednesday, same time as Uber. So Shopify's projected to do EPS of 29 cents versus 26 cents from last year on revenue of $2.55 billion versus $2.04 billion from last year. That'd be up 24.5% year over year. Pretty good, if you ask me, for Shopify. And this stock, man, was in the gutter back in April. It cut in half from February to April. Now we've recovered that entire loss. We're pretty much back to the 120s. We've doubled back up now. So it's funny. We cut in half. Now we doubled back up. And, if earnings are hot, man, if we can finally get a push over 130, which has been resistance for a couple weeks, it was resistance back in February as well. If we're able to get out of this point, we could be going higher. So Shopify is a must-watch. SMCI Super Micro is also a must-watch. This is up around 3.5% today. They're reporting earnings here in a couple of days, as are all these companies, right? They're actually tomorrow. Oh my gosh, tomorrow morning? No, tomorrow after the bell, Tuesday after market, we're getting SMCI. They're projected to do EPS of 44 cents versus 62 cents from last year on revenue of $5.91 billion versus $5.31 billion from last year. That would be up around 11% year over year. Not bad at all for SMCI. And you can see the stock chart looks pretty dang good if you ask me. We're obviously breaking out, uptrends there. We got a little hot recently, saw a drawdown. Now the uptrend, as you can see here, is continuing into earnings tomorrow. This looks pretty good, guys. SMCI. AMD is another one. Stock number 4. And by the way, guys, hit the like button. Run the likes up. Make sure to subscribe. I appreciate you all for tuning in. Advanced Micro Devices has been hot. We got news that they're raising the price of their MI350 chip is what it's called, I believe. That caused the stock to go up. We hit 186 recently. Now we're at 176. And look, we're bouncing off the 50 SMA on the 4-hour chart heading into earnings. We have earnings coming up, I think, tomorrow or Wednesday. Yeah, tomorrow, Tuesday, after the bell. And analysts have them doing EPS of 48 cents versus 69 cents from last year on revenue of $7.43 billion versus $5.83 billion from last year. That would be up 27% year over year. So AMD, guys, if they crush it, if their guidance is strong, which I think their guidance will be good, that's my prediction. I think it's going to be really good. This could continue moving here. That's the reality. Momentum's clearly here, and I think we could be on our way to $200 a share. Not tomorrow, not in a week or two, but in due time, in the next couple of quarters, I could see this going to $200 a share, in my humble opinion. But at that point, it might get a pullback after. We'll see. But AMD, I'm locked in on this one this week, guys. Disney is another one, DIS, which I have a love-hate relationship with Disney, guys. I used to own the stock for years. I made some money on it, but it ended up being a lousy investment. It was one of those where I was buying it, hoping for the big turnaround, but really we never got it, so I cut it out of my portfolio a couple years ago. And yeah, it's just been a terrible stock to own. I mean, look at this. There's a huge head and shoulders on the monthly chart. We're at the same level we were at a decade ago. I'm not even kidding, guys. I'm not even exaggerating. 10 years ago, August of 2015, we were trading at $119 a share. I swear to God, look at this. August of 2015, we're at the same price. So, yeah, I mean, Disney is a lousy investment. Looking at it historically, obviously over the next 10 years, it could be a great investment. We don't know. It might go to $300 from here or whatever. But as of now, Disney's not doing well, right? They've recovered a bit from COVID. They've gotten better over the years, but still not the Disney, stock-wise, company-wise that we once knew decades ago. It's just not. Those days are gone for now. But hey, we'll see. Earnings are this week. I think they're on Wednesday. Let's double check that. Yeah, Wednesday morning. EPS, the estimate is $1.45 versus $1.39 from last year. On revenue, let's see, they have them doing $23.76 billion versus $23.16 billion from last year. That's up 2.5%. So Disney's barely going to grow if you're accounting for inflation. They're at 0% revenue growth. I mean, guys, 2% is nothing if you're accounting for inflation. So Disney, yeah, not the best stock, not the best investment. Do they have good movies? Yes. Do they have, is it a fun time at the parks? Sure. But the stock Yeah, not the best. And that's a mistake a lot of people make. They're like, oh, I like this company. I have fun using their products or going to see their movies. Oh, I'm going to buy the stock. That's a mistake, which we're not going to get deep into that subject in this video. But a lot of the time, sometimes it's a mistake to just buy a stock solely because you use their product. It's like, oh, I love Yeti, right? I have a lot of these Yetis. I got like 20 of them. But am I going to go buy the stock? Not necessarily. Keep that in mind. So that's Disney. DraftKings is another one. DKNG, they're on, I believe, Thursday. They're usually later in the week. No, they're on Wednesday. Okay, after the bell for DraftKings. And analysts have them doing 39 cents versus 22 cents EPS last year on revenue of $1.42 billion versus $1.1 billion last year, up 29%. Year over year for DraftKings, not bad, and football season is right around the corner, guys. That's good for DraftKings, all these companies for that matter, and we'll see kind of what the guidance is looking like there for DraftKings. Another month till football season, which honestly, man, that's my favorite time of the year. I love summer. I love going on vacation, doing all that stuff, the warm weather, beach, blah, blah, blah. But, man, nothing hits better than September, October, the leaves start to change. It gets a little cool out. You whip your hoodie out. It's football season, man. Nothing beats that. Yeah, the holidays, it's the best time of the year. I'm pumped for it. And well, gonna enjoy August until football season comes. But yeah, that's EPS, and that's the revenue estimates for DraftKings. Keep your eyes on $45. Big resistance. If it's able to get out of there, we could be going higher. And last but not least, Novo Nordisk. Right? This stock's been in the gutter for months and months. And honestly, guys, if they go lower on earnings, I might have to look deeper into this thing. We're down from 150 now to under $50 a share. We're down 70% pretty much from highs. And at this point, the max chart looks good. This company I don't think is going anywhere. Yeah, we got some bad news regarding GLP-1s a couple weeks ago, right? Was that with this company or was that another company now? I might be confusing these. Either way, whatever. Novo Nordisk, watching it closely. NVO, and analysts have them doing EPS of $6 and a penny versus $4.49 versus, on revenue of $76.75 billion versus $68 billion from last year. That would be up around 13% year over year. Not bad, but is it going to be good enough to get the stock back in the right direction? I don't know. And the reality is, I'm a bit worried buying the stock here because it is a falling knife. But hey, if it comes lower, it might be worth looking deeper into, like I said. So with that being said, guys, I'm going to wrap up the video. Hit the like button. Feel free to subscribe. Join the email stock newsletter. Check out my Patreon for my portfolio updates. All the links are right down below. And with that being said, cheers. I'll catch you in the next video.